We are going to get it going now by taking over to Brian Stutland, the founder of Equity Armor Investments. And Brian, when the market turns wild, which it so often does, how do you strike a balance and keep the peace at home when your days are so hectic trading?
Yeah, well, I mean, it's a difficult task. When we see levels of volatility elevated in the stock market and things get wild and risk sort of increases in that investment, obviously more time is then committed to watching how these assets are behaving and how investments are going. And so obviously that takes a little bit away from family time. You know, I think one thing that's important, though, is that when you do get that free time, it's spent, whether it's, exercising, it's spending time with the kids, and really stepping away from it. I mean, the one thing I enjoyed about being a trader is that when the markets closed, I was able to sort of shut my brain off and then carry on with my life afterwards. And I think that's important. So when the buzzer goes off and you step away, I think it's important then to just clear your mind and let that go until it's time to come back to that. So it's not always dwelling on your mind. It really gives much better peace of mind, when it comes to having that mindset of a trader. I wrote a book, a couple of years ago, basically talking about the mindset of a trader. And this is definitely one of the critical steps, is that when you're in it, you're in it. But when it's closed, you're sort of stepping away and letting that go for the time being.
What's your best trading strategy in times of high volatility when the market is really swinging around?
Well, me as a trader, I'm a little bit more complicated. I like trading volatility back and forth, and we trade something that's called the VIX that measures volatility in the marketplace. It's not really for the average investor to really look at, but one thing in general, the reason why I use it is because what I'll do is I want to look at ways where I'm risking a little bit less on the downside, but still participating on the upside to its maximum being. And so when volatility levels elevate, what that means is my investments are going to swing around a lot more on a daily basis. And if my expectations are, hey, I want to make 5 or 10% during the year, and now volatility is twice as high, then I've got to lower my exposure a little bit to some degree and wait for volatility to come back down. So I like to see how my portfolio is swinging on a daily basis and make sure I have that good diversification or lower that risk. If I've got to move to cash for a little while, that's okay to make that call. Wait for things to sort of bottom out, so I'm not seeing the level of volatility, and then it makes me, puke things out at the wrong time because I'm so nervous about the swings I'm seeing in my portfolio.
Always good to have you here. Thank you, Brian.
Thank you.
Go to businessfirstam.com for where to see our show on TV.